Just like that, we are live. Welcome back to Benzinga Live, everybody. I'm your host, producer AB. Hanging out with me is the man, David Green, going to be joining us from Wall Street Global Trading Academy. We're going to be doing some live trading with David. And guys, you're in luck because David said we can ask a lot of questions today. It's a little bit quieter day in the market. So if you have any questions, any stocks you want to look at, anything to check out, today is your day. Now is your chance. Start dropping those in the chat. Without further ado, let's go ahead and play the intro of the show and bring David on and get the show going. Ooh, wrong video.
This is Benzinga Live with Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. Alrighty, guys. Let's bring David on, see what he's been watching. David told me behind the scenes, he says he thinks this day is it's already been slow, but tremendously slow down in about 30 minutes. So if you've got any trades out there, maybe, we'll see. We'll see if we can get any open in the next 30 minutes. David, how you doing?
What's up, ladies and gentlemen? What's going on, Aaron?
Not a whole lot, just hanging out. Like you said, Tuesday before an FOMC meeting. Not a whole lot going on.
Not a whole lot going on. I mean, we're going to do some options. Maybe we'll do a couple now. We'll do a little, we're going to do some lottos for tomorrow with the Fed coming out at 2 o'clock. Let's take a look at the SPYs, guys, and just see where we are net overall. We're at about 380. Go ahead, Aaron.
I don't personally, like, I wouldn't go out here and buy calls right now, and I think I've been more bullish in the sentiment, but it seems to me like everyone I see on Twitter, everything is talking about buying puts tomorrow. I don't know. I don't know what the, like, what wouldn't be, I guess if they go a full percent instead of 75 will really go down a decent amount. Is that the idea?
I would think initially we would, yes, 100%. You know, we're in a position in the SPYs now where we're kind of in nowhere's land. So, again, I'll be reactive, not proactive. You know, let's look at the spiders on the daily, show everybody where we are. You know, this is a daily. We're still in this massive downtrend that we haven't been able to get above for the last 7 days, right? So 392 is our first resistance level on a daily. We'll go weekly. And again, you know, weekly is just as bad. We got 398 there. And even if we go monthly, I can understand why everyone's leaning towards the sell side because the market looks like crap right now on every chart that we're looking at as far as the spiders are concerned. So
I know that's why I said I wouldn't want to. That's why I said I wouldn't want to come in and buy calls tomorrow. But it scares me.
It scares me.
Exactly. It scares me that 80% of my Twitter feed is people talking about buying puts.
100%. Yeah. Again, for us, I'll be reactive rather than proactive. What I'll do is I'll look at this little, well, first let's look at SPY. These options are going to be all jacked up. We know that going into tomorrow, right? So where are we now? We're at the, I got Tesla up there. What do I got Tesla up there? Let's get the SPYs up there. All right. So let's just say we're at 385. We're right here, right? That's where we are right now. Hold on, guys. I think we just got into a little trade. Let me just see where we're at here. Oh, we're in Tesla. Okay, hold on. Give me 1 second, guys. I'll put this back up in a minute. Where we get Tesla? 311.85. I think. Let me put up the Tesla. Okay, so we're watching Tesla. It's acting great. We just bought a tiny little bit on the 90 EMA here at 311.85. We're going to add to that if we get to this. What is it, guys? 311.11. Let's put another little order in there. Give me a minute. 311.11. So I'll explain to you guys exactly what we're doing. 311.11. Put that out. All right. So Tesla has been acting really good all day. It's been in a nice uptrend all day. So we're trying to buy a little. We bought a tiny bit on the 9 EMA. We want to add to that if we get to the 15 EMA at 311.11. Let me put that out for all my people in here. And let's take a look at the market and see what we're doing there. Let's take a look at the spies real quick. See if we're coming in a little bit or what we're doing. Nah, spiders are dead, hanging out right here. Okay, so let me get the SPY options back up. Guys, put a little Tesla out at 12.20. We spike up to that range. We'll take 35 cents on some if we get up there. All right, let's get back to the SPY options. And we'll see which way they're leaning by looking at this. So let's take a look. Okay, so we're at 385, right? So let's go down for 5 points for tomorrow. 380 puts. We're trading at $2. Let's go up 5 points. 390 calls. We're trading at $1.63. So it's definitely leaning towards the downside, right? It's more expensive to buy the puts than it is to buy the calls. So that's where everyone's getting that from, Aaron, what you're looking at. I don't know. To me, again, we'll come in the morning and we'll react rather than be proactive rather than reactive, and we'll see what happens.
I almost, and this is just going based off of the past few FOMC announcements, you know, this 2 p.m., the press release, and then Powell speaks. I feel like what's happened the past few times is whether we've gone down or up once Powell starts speaking, there's a little bit of a reversal from there. I might try to play that reversal as opposed to trying to predict what's going to happen coming out. Is that me getting more mature as a trader?
100%.
Oh man, I don't like that.
I mean, us as day traders, we're always going to be reactive, not proactive.
Man,
unless you're going to do something with options. If you do something with options, then that's fine. You're not gambling. But if you try to pick the actual direction that you think the spiders are going to be based on what
wait, Dave, I got to back you up here a second. You said unless you do something with you're saying options is the only way you're not going to be gambling here?
No, yes, 100%, because you know your downside. I mean, if you're going to go in and say, "Oh, I'm buying spiders going into this," that's 100% gambling. And if you're going to go in and say, "I'm selling it going into this," that's 100% gambling.
I just wanted to clarify because most people would see it the opposite way. That options you're gambling, but you're saying no.
Either way you're going to do that, they're both gambling, but at least options, you know your risk. That's what I'm trying to say, right?
Yeah, and I'm with you there. I like that. I would rather, you know, we've talked about this many times before, right? If I buy some SPY contracts for tomorrow, it's $150. I know that's the most I can lose. But
exactly right. So
what I'm saying now is,
want to do anything would be to do options.
And what I'm saying now is instead I'm going to keep that 150 till 2 p.m. and then I'm going to use it to trade based off what we're doing there. And we'll see if that works better for me.
Yeah, and this is what happens. At 2 p.m. they're going to make the announcement. So we'll get some kind of knee-jerk out of that. Maybe. Who knows? If it comes out exactly what we're looking for, then maybe nothing happens, right? That could possibly be too. And then 2:30 he'll come on and speak. And then usually, quite frankly, Thursday is when you get the real move in the market. So we could have knee-jerk, and then Thursday you get the real move in the market. That's usually what happens. So, you know, if something stupid happens, I can tell you this, right? And we'll go to the weekly, right? So last time we made lows, we got down to that 362, guys, and you can see we exactly held that level. That was the lows when we got down there. That's moved up to 367 now. So again, if something really stupid happens, you know, 367 is our first support level in the SPYs. Obviously, I'd be looking to buy a little bit there for a trade if that happened. You know, those are the levels. We got 367 on the downside, and we got first level 392 on the upside. So those are the two levels that we're looking at as far as that is concerned. All right, we sold a little Tesla for some profits here. So let me show you exactly what we did here again, guys. Okay. So we got a little Tesla on the trend at 319.80. We just sold some for a 35-cent profit. Guys, let's sell a little more up at 45. Take a 60-cent profit on some. Laka. And then we'll see what happens from there. So this is a trend trade. Let me explain to everybody who's looking. And there haven't been a lot of trades that set up today. But look how good Tesla has been all day, right? Nothing but up, nothing got up, nothing got up. And every time it's pulled back to our 9 EMA, it's given a nice trade out of it. So we're able to get it at 80. We just sold some at 20. We just sold some at 45. and we'll have a tiny little bit left to see if maybe it can make new highs. Now, once we've done that, we'll bring our stop up so we can not lose money on the trade, and we got a freebie trade in that one. So that's why we just executed that. Now, there's some people in the room that just did 1,000 shares when we did that. They averaged 35 cents on it. They made $350 in about 15 minutes. Hold on. Apple trend trade. Let's take a look. Again, guys, we're getting towards lunchtime. So I don't know. I would wait on any trends during lunchtime. I'm not crazy about it. I like to see Apple pull back to the 30, 155.30. Let's put an order out there in case we can get down there. All right, we didn't get to add in our Tesla, so let's put an Apple out. And for those of you who are just day trading, this is what we do all day. We're looking for levels to buy our stocks. Apple will do a full trade down there, 155.20. All right. All right, so let's take a bunch of questions from everybody, guys. 125 basis points. They're not going to do 125 basis points.
Nuclear option 125. Yeah, I
don't
mean,
think that's going to happen.
Yeah, and the way I see it too, and I know that the market's so reactive, and you have those algos that'll be kicking in and whatnot. But I like whether it's 75 or 100, it's going to be more about Powell's tone and what he says about going forward.
100%. Yeah, are they going to be? So it's going to be about what he says. Is he going to come out and say, you know, we're going to be data dependent? Is he going to come out and say we got to keep being aggressive? That's going to be the real move in the market when he comes out at 2:30. So look, tomorrow's going to be a wackadoodle day. That's the bottom line, which we love. I love that. All right, guys, we took our profits in Tesla. Let's take a look now. We're coming back in. And this is why we trade, guys. You know, we took our 40, 50 cents. Next level in Tesla now is 311.10. And I'm not even going to be in a hurry there, guys. Let's just relax. Let's go down to our, what is that, 310.03. Let's put that out, and we'll do a full trade if we get down there. Further, something moves to one of our levels, the more aggressive we want to be. So let's get 310.03. Guys, this is what we do all day, by the way, in the private trading room. We just look for levels to trade stocks. That's it. Oh, you know what, Brian? You know what we're doing, Aaron? And we have 850 people registered for tomorrow night for our webinar.
Holy cow.
Yeah, let's post the Wall Street Global Trading Academy. We're doing a free webinar for everybody tomorrow night at 7 p.m. Everybody can come in there, and then we'll figure things out. 1,000 shares of Tesla at 313 is way too much money to risk. No, it's not, dudes. We're trading. Okay, so you can't look at it that way. All right? The most I'd be risking if I did 1,000 shares of Tesla is 50 cents or $1. It's the same thing. Okay? You're not risking $100,000. That's what you guys don't understand. That if you really don't understand day trading. We're not risking $150,000 or $350,000 because we buy 1,000 shares of Tesla. We're trading. We're going in and out of our trades all day. A lot of people getting confused on that. On that trade, it took us about 2.5 minutes to make 40 cents on the trade. The most we were going to risk on that, if we did 1,000 shares, was $500. We made $400 on the trade. So you're not risking that money. That's a huge misconception about day trading. Okay. And if we do that 3 or 4 times a day and we make $300 or $400, even if we do it twice a day, we risk the trade, not the stocks. So exactly what Mike just said. So let's say we do that twice a day and we make $500. Okay. That's $125,000 a year. You're not risking that much money on the trade. So everybody's got to get over that. Okay. When you have buying power. So I have $27,000 in my account. That gives me $110,000 in buying power. So what that means is at any point during the day, I can trade up to $100,000 worth of any stock that I choose to. Okay. So yeah, it will. No, Deuce, when you have this is important, Aaron. I hope you don't mind us talking about this for a couple minutes. It's important
go ahead.
For people to realize this. When you have a retail trading account, Deuce, and you buy a stock and you sell it, your buying power, it goes right back to where it was. Okay. It goes right back to where it was. There's no settlement time. So once I have sold that Tesla, we're on a margin account. It goes right back to whatever my margin was. For those of us using small cash accounts, yeah, look, guys, I urge you to come in tomorrow night, okay? Because we're going to talk about small cash accounts. We do options. Porta Bianza.
Yeah, and guys, again, if you guys have any questions, it doesn't have to be about a specific stock. It can be just about trading in general, or managing your assets, managing risk, whatever it is. If you guys have any questions, ask them now. Again, Dave will be having this webinar. You said tomorrow night?
Tomorrow night at 7 p.m. Yeah. Yes.
Tomorrow night, 7 p.m. Hit that link in the chat, or you can go to wsgta.com and it'll redirect you to this link. But yeah, guys, go check that out.
We don't have a lot of time today, but if you're trading a small account, right? If you have margin corrected, if you don't, you can't. That's correct, Deuce. Yeah. If you're trading a cash account with $2,000 or $3,000 in it, it's almost impossible to trade any stock. Okay, that's just the bottom line. Unless you can trade fractional shares, which is not going to get you anywhere. It'll take you 10 years to build it up to a point where you can really do something. So you trade options. I have people in my room that are, yes, it's free tomorrow night, Rick. Yes. WSGTA.com. It does not cost anything. Aaron will put it up there again. But you can trade options the same way based on the same technical analysis that we do. Someone in the room, guys, give me an options trade that I can put up and show people. Give me an Apple. Let me see. I'll explain this to you guys real quick. Give me an Apple 157 call, guys. Give me the symbol for it. Okay. Give me the symbol for an Apple 157 call. So you can trade with a $2,000 account, and you can trade the same stocks that we trade. Okay. Same stocks that we trade, and use the same technical analysis. It's crazy. And we'll talk more about that tomorrow night. Yes, it's free. No, Deuce, I get it. And I'm just trying to explain to people that there's ways around that. Okay, here, let me put this up for you for one quick second. .AAPL 220923. That's a 155 call. 155. Nope. Give me it again. 22. All right. AA. This is important, guys, so bear with me for 2 seconds. AAPL 22092 3C155. Okay. So this is the Apple option that trades exactly with our technical analysis, and it trades exactly with the price of the stock. Okay. This is a 155 call. It's in the money. It trades at $3.80. So if you wanted to trade this, to do one option is $377, right? So if you look at this, when it came down to our level, and this is today, guys, this came down to a level at 10:15 at $2.39, right? $2.39. So you could have bought this option based on the same technical analysis that we're using at $2.45, and now it's $3.76. So one option is over $100, and that's how you can get around and use options trading to do the same exact thing that we're doing. And we have people in our room that post every time they see that, right? So it's a beautiful thing. You can trade options with a very small amount of money. I use Thinkorswim. Yes, Thinkorswim. Well, I use 2 different things, guys. Thinkorswim I use just for charting. This is our Thinkorswim charting system, okay? And then I use Interactive Brokers. That is for my trading. And again, it doesn't matter what account you use. But guys and girls, my point of all this, and then we'll get to some questions, is that you can trade with a small account and trade options and put all of our technical analysis in and still be able to do exactly what you're doing with a small account.
Excuse me. Yeah, and I think that's where a lot of our audience is. We're kind of all trying to figure out how to grow our small accounts. Yeah, Thinkorswim. I bug log primarily. TRS is Thinkorswim. I primarily use I use some Interactive Brokers, Robinhood too. Just depends.
To do options or
yeah,
anything that you do. Deuce, we're all good. I love you, man. Okay, Henry, when we're doing with day trading options, the closest ones to expiration are going to be the ones that we trade, and the closest to in the money it'll be the ones that we trade, because those are the ones that are going to trade the best. 100%. Yes. There's always money in a banana stand. That is correct, Mike. 100%. I guess my point about all this, guys, is you should be using some kind of technical analysis to make your trades. You have to be. You guys get that at Benzinga, right? I don't know how many people we have here, Aaron. Usually 100, 300, whatever it is.
250 today.
250 bucks. Do you trade long only if the price is above Todd, I love being long. I love being short. And that's another thing that a lot of beginning traders have a problem with, is being short stocks, right? Some people don't know how to do it and don't understand how to do it. Half of our trades are long, half of our trades are short. Whatever they set up for us to do, those are the trades that we're going to do. Don't be afraid of being short a stock. Again, when you're trading, your only risk, guys and girls, is whatever you're willing to risk on the trade. And every time we do a trade, we have a hard stop order. We know exactly what we're risking on the trade. But please, you got to be long, you got to be short, right? We looked at Tesla earlier today, and it didn't. Check this out, guys. So this is a short, right? We wanted to short Tesla at 313.60. We had a pivot point there. Now, a pivot point is one of our technical analysis things that we use. And we had an order out to short it at 313.60. It just missed it by a couple of points, and it went down $2 from there. So that would have been a nice, we would have taken 50 cents, a dollar, and $1.50 out of it. So don't be afraid to be short. Thank you more than you know for stating what you did. Options small. Yes. 100%. Yes. Do I have a margarine account? I tend to go with butter instead of margarine, Duke. But if you have a margin account, you can go short. 100%. Yes. So again, it tuned in just for David today. Thank you, Kyla. Listen, you guys are going to have us for 2 hours tomorrow night, me and Peter. Okay. So we have over 800 people registered for tomorrow. So
how about Netflix? Netflix is breaking out right now. I don't know if anyone in your room is trading Netflix.
Netflix has been good for a while now. I think it got upgraded the other day, like 3 or 4 days ago, right?
Yeah.
All right. So here, Netflix is coming to a short level now. As good as the stock is, we're coming up, guys, from $245.50, and we have a pivot point right here at about, I can't get exact, 249.20. So I want to short it for a trade. And again, this trade might be for 30 seconds or a minute or 2 minutes. It doesn't mean I don't like Netflix stock. It just means that it's going to get a little really stretched out up there. And I think the odds are, okay, and everything we do is about odds. The odds are if we spike up to this level that the next move is going to be down from there. And every trade we do is about putting the odds in our favor so we're not gambling. A lot of people say that we're gambling when we trade. We are not. We are being patient. We are being disciplined. And we are waiting for stocks to hit our levels that make sense. So do I ever sell naked options? Trout, the only time I will ever sell a naked put or call is if I want to get into a swing trade. So I don't mind the risk of getting put the stock. That's a little advanced. But check this one out, guys. And we were watching Netflix all day, okay? So this set up for a few good trades today. Check it out. Right here, it hit our trend at 242, and the stock went up to 247, up 5 points. Right here, hit all our trend lines. Now, check this one out. It came down and hit one of our regular moving averages. Right here, that's our 65 EMA at 243. That gave, now it's given $5 from there. So now, I'm hoping it goes back up and hits that level. But if not, we'll be looking to buy Netflix now if it can pull back to one of the trend lines. The idea of the trend line is it'll pull back to the trend, stop going down, and then start going up. Yes, exactly, Roland. So and I just addressed that, Roland. Roland said all these quick trades are good if you have 25 grand in the account. What do you do if you only got 3,000 a week? And we talked about that, Roland. You really have to concentrate on options if you only have 3 grand in an account. Otherwise, you can trade fractional shares, but it's very, very difficult to build an account that way. So, Roland, you got it. You got to get into options. Okay. There's another way you guys can open an account without 25 grand. And I think with a proprietary trading account, and we'll talk more about this tomorrow night, you can get in with as little as 5 grand, and they'll give you $100,000 in buying power. You just got to take and pass a couple of exams. But I don't want to clog all this up with that. But there's a way to do it with as little as 5 grand. Otherwise, you really got to concentrate on options. That's it, Roland. So that's it. We took profits off SoFi and Fubu. You guys remember when we bought the Fubu options? Right? I think we were with you guys.
I do remember that.
We bought the Fubu options for 6 cents. We bought 5 calls, and we sold them for 40 cents. I don't know if that's what you're talking about, Easy Mike, but last time we were here, let me see where it was. We were down here. We were just breaking out. was a couple weeks ago, and we bought 5 calls in that for 6 cents, and we sold them for 40 cents. We made 700% on that trade. Mike, is that the one you're talking about? Yes. Yeah, that was a really good trade, right? For 6 cents to 40 cents. That was pretty good. Oh, you bought the actual stock, Mike? We bought options. But yeah, it broke out. It was nice, and it gave a nice little, 20-30% trade and 500% in the options. Market's rallying a little bit now. Yes, we are. All right, let's check on Netflix to see if it's getting up to that level. We got the 248.86. There's another great lesson that everybody has to learn. When something gets really close to one of our levels, chances are if it goes back there, it's going to go through that level, right? But, if we would have spiked right up to where we were shorting it, we already got a 50 cent or a $1 trade out of it. So I'm not so sure I'm crazy about it now. We'll cancel it for now. We're not getting any of these on the buy side. Check ADN. Oh, here's another thing we should be talking about. Yes, the seminar will be recorded tomorrow night, and we'll send it to everybody who misses it. Wall Street Global Aaron will post it again before we get out of here.
Yep, I'll do it right this second.
Apple looking good. Apple looks great, and that's why it was not a short at that first little level, right? So everybody in the room, all right? We got a bunch of people in the room. I'm going to give you guys a quick test, okay? If we look at the Apple chart, I guarantee you guys are going to learn something right now. What is the next price on my chart that it's telling me I might want to short the stock? Let's see if a few of you can type this in. It's our pivot point. It would be stretched out almost $2 from here. And our charts tell us exactly what the price is, right? So that's why once we have all our technical analysis in, guys, we try not to even think. It's telling me if Apple goes up to 159.21, I have resistance there. That would be up almost $1.50 from where we are right now. And it's telling me on my chart we would short it there. Yeah, you got it, Duke, right? There it is. It's telling us. That's the beauty about what we do. It tells us where to make our trades. There's no thinking involved. The more thinking you do when you're trading, the more trouble you're going to be in. And if you're hoping something's going to work out, that's even worse. So we don't think, we don't hope, we trade what they put in front of us. Yeah, the whole market's getting a little bopper now, right? So these lines we have on our chart is yesterday's low and yesterday's high. So we'll definitely short the spiders if we get to yesterday's high. There is no chart you are showing. Aaron, my charts are up there, right?
Yep, we're looking at the S&P 500. You got the RSI on the bottom.
There it is. So we have a bunch of moving averages in. I'll give them all to you guys tomorrow night. We're going to share all of our technical analysis with you guys tomorrow night. So we'll go over all that for everybody. Ross's answer is better. What is Ross's answers? Do you have to use charts to trade? If you're not using charts to trade, what are you using? That's my question to everybody, right? Are you buying a stock because you think it's going to go higher? Are you shorting a stock because you think it's going to go lower? I don't know. I can't do it without technical analysis. Maybe some people can. What's your recommendation for a free options training course? Sharon and Brian in my room, what's the best place to go to learn about options besides our room? There's a couple of really good places. I don't use charts and I'm down a little bit. Try using them, Janine. Come tomorrow night and I'll share with you all the technical analysis that we use. Okay? Look, I think you have to. Brian or Sharon, give me a good because I know we get out of here in a minute. I think Myrna and BNTX popped because something's going on in China. Unless you post entries and exits in here, your P&L is meaningless to post in here. I agree with that, Jay. Tasty Trade. Okay? tastytrade.com, guys. Options crash course. Okay? Jay, I am a big believer in that. And I will never get into a trade that I'm not posting for the rest of my people. Obviously, everybody always pushes their buttons. But didn't we just post for you an entry in Tesla where we got into the trade? Right? We posted that at 311.80. Okay? That's now paid $1.50 if you stayed with it a little bit. Right? So there you go. We post every single trade in our room that we do before we do them. Period. And if you're trying to learn from somebody who doesn't have skin in the game, I suggest you don't learn from them. Check this out, guys. Look at Netflix. Check it out. All right. So it exactly got to a 249.30. You want to talk about technical analysis, guys? You're in it, guys. You're in it. You're in it. Sally's in it. All right. Everybody in my room is in this trade. It got to 249.30, and it already went down 70 cents. Boom, chaka-laka.
You got a nice little premium on those puts. Sold them already?
Yeah, if you did it, perfect. Right. So if you went up here and did a 249 put when it was right up there, you probably could have got 30, 40, 50 cents out of it. That's it. That's a trade. I should start a website for Saturday training. No, we can do that, Brian. And that's the trade. And if you don't get in and out of the trade, this is what happens. Boom. It just spiked right through it. So we'll look for another level now. Right? Just cash Netflix off the volume profile. All right, there you go. What's up, David? I really enjoyed my week in the room. Learned a lot. Can't thank you enough. You are welcome, Chris. One thing we do, guys, and nobody should be intimidated, whether you're a beginning trader or you're an advanced trader trying to take it to the next level. We're here to help everybody, okay? I have guys in my room that trade 5,000 shares every time we do a trade, and they'll help the people who are trading 10 shares, okay? Curtis, come tomorrow night. We'll talk about the trading room. I don't want to do too much right now. Come tomorrow night. We'll talk about the trading room. We'll talk about my private trading room. We'll talk about a bunch of stuff, okay?
WSGTA.com. I'll throw that in the chat one more time. Yeah.
You can put my email, Aaron. If anyone has questions, I'll be happy to help anybody.
Sure. dgreen927 at yahoo.com. 927 at yahoo.com. That will be in the chat as well. David, always a pleasure to get you on. Hope you the best of luck tomorrow trading into the FOMC. I know it'll be a crazy day, and we'll catch up next week.
You got it, Aaron. Thanks for having me.
Of course. All right, y'all. That was Mr. David Green. WSGTA.com to sign up for his webinar tomorrow night. Couldn't recommend it enough. David is the man, especially if you're trying to learn more about how to grow your short-term trading account, execute on some of these day trades. But all right, guys, let's go ahead. I'll pull up my Benzinga Pro. We'll go through some of the top headlines of the day so far. Something that I was watching today, yesterday, this morning, after the market yesterday, Ford absolutely got slammed. We will talk about that headline with Ford. Down 10% today. Was down about 5% after hours yesterday. I am, full disclosure, a shareholder in Ford in my long-term Roth IRA. This is a good question. I don't know where. Actually, I did sell a lot of stocks in my Roth the other day, which I don't like to do, but I was in a tough position. I'm opening it up right now on my phone to see, to check my. Okay, I still have my Ford shares. Current price is $13.51. I bought them at unit cost $10.79. All right, so I'm still in the green on my Ford position, up 25%. But this thing's getting hammered today, down 10%. This is one of the coolest, most popular features on Benzinga Pro are WIMs. Shout out the WIMs team. Mr. Bill, Randy, they're around the office today. But right here in this blue box, it may be a little hard to see, so I'll go full screen here. It just gives us a little brief description of exactly what's going on. So when I'm on Benzinga Pro, I don't need to go to Google and scour the web and go to all these 8 different sites to try to find exactly why Ford is down 10%. I can see it right here. Ford shares are trading lower after the company said expects Q3 inflation-related Q3 supply costs to be $1 billion above what was initially expected. The company expects to have 40 to 45,000 vehicles in inventory at the end of Q3, lacking certain parts. So, not what you want to hear. I'm going to play whatever you want to call it. Glass half full, silver lining, devil's advocate. For me, I'm not in this as like a swing trade. It's in my Roth long-term IRA. I plan on holding these Ford shares for a long time. I like what Ford is doing in terms of, their efforts into the EV space. It sounds like Ford is set to benefit greatly from a lot of these, the Inflation Reduction Act and similar bills. So that's one side of it. The other side is that I really don't mind a company. Usually, if they come out early and give this pre-warning, it's because they're trying to kind of separate it from the earnings. You know, so I don't think the earnings are going to be good, or I don't think anything there. So it is interesting. I don't mind companies getting out in front of it, though. I really don't. Saying, hey, by the way, and let's see. Let's check when. So yeah, I mean, Ford's not set to report for another month and a week, so about 5 weeks away. So I don't mind it, really. I mean, I think that's a fair thing to do, is to come out ahead and say, you can see a nice little head and shoulders here. Boom, 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 boom. And I've talked about this a lot with different technical traders, but on a head and shoulders pattern, your best way to trade it is often by getting short on the right shoulder. And there's a couple different reasons for this. One is because the move down is very defined. You have, you can base it out to this previous support level. Two, you have sometimes, and especially given this market environment, a chance that you break through these support levels, then your returns are very much, if you're short and you break through the support level, then you're in a good position. Whereas if you're long, trying to play this on the upside here on the shoulder, you have a very much, capped ceiling right here. So beautiful head and shoulders setting up on Ford's chart. I don't know if there are people out there pointing this out, finding it. If I would have seen it, I probably would have tried to get a nice little short position here on the right shoulder. But again, I mean, this is a name that I'm still long and strong, baby. Christine Lane, what thinking you might change rooms for trading? What room are you in right now? Just curious. Anyone watching AMC? Let's check it out. And then we can do a preview for tomorrow. And then I wanted to do a more macro segment just about exactly what, a higher rate environment will mean for different companies, because I see. Let's talk about AMC real quick first, then I'll get into my rant, monologue, whatever you want to call it, about, the interest rates and what it'll mean for. Whoa. Whoa. I had no clue this thing got under $10. Holy cow. What about Ape? Is that why it's so low? I mean, I don't know really what to tell you. I've been, I think, bearish. On this for a while. Damn, I had no clue that these stocks got beaten down so hard. I mean, I knew they weren't doing well. But wait, this was August 12th, like a little more than a month ago. We were at $28, and it's just gone off a freaking cliff. What happened this day when it was down 41%? Is that when Ape opened? Yeah, I like David. There's too many people out there, I think, that, traders and whatnot that try to charge courses and stuff. David, I think, is one that is really trying to educate his room and his, people that are paying him. All right. Let's talk about, I want to talk about growth versus value real quick, because we talk about the cyclical nature of the markets, the cyclical nature of the finance industry in general a lot. But I want to talk about what that really means. So let's take something. Let's first look at the S&P 500. Right now, if we're on a daily chart of the S&P 500, we're at $385. We've drawn down about 20% from all-time highs. Let me get you a more precise, about 18.75%. So about 19%. We've drawn down. Now, if you compare that, and it's no secret, right, that growth has been out of favor, not just since we topped out in January 2022, but really since November 2021. And how can I know that? Because let's look at some more growthy stocks, right? Let's look at Tesla. Tesla didn't get back up to its all-time highs in January. It got close, but it topped out in November. ARKK topped out in February 2021. But still, I mean, November, October here, you're at 126. ARK didn't get close to coming back up to that even in January. So right here, right, I'll zoom in on this chart. Right here on ARKK, where my cursor is right here, is where we were making all-time highs on the S&P 500. So that should show you, right, if ARK went from 120 to 90, while the overall market is at all-time highs, that should show you, okay, growth is out of favor. Why is the market at all-time highs if ARK and Tesla and some of these other stocks are off their highs? Well, there are other stocks in the market that make up the S&P 500. The S&P 500 is comprised of more stocks than just your FANG stocks or your ARK stocks. Really not a lot of ARK or high growth stocks in the S&P 500 at all. But you have, your value stocks, whether it's energy, whether it's financials, all these other stocks. Growth has been out of favor since November because we started getting higher inflation reads, right? We started getting the notion that the Fed will have to start to increase rates, thus creating a optimal environment for growth. And the market's known this. The market's been, market participants have known this since November 2021. That's why these things started selling off. It wasn't, sure, some of these companies, especially, crypto companies, well, and that's all related to interest rates rising, is when crypto started to struggle. I think we're starting to see the end of this cycle out of growth. And I think, we have some clues here on the chart, on ARK's chart, that we haven't really gotten that much lower than $40 where we're at now since May. For the past 4 months, we've kind of been consolidating down here. Right? And all this is subject to, if we have some huge global financial crisis and everything crashes, will these names move lower? Of course. Sure. But the flip side to that is if interest rates remain at 3.5% or 4% over the next 6 months or so, that might mean just subdued returns for stocks in general, right? Including your Apples, including your Googles and your Amazons, those high interest rates. So in that case, I think there'll be a lot of investors, asset allocators that will look around and say, okay, well, if Apple's not going to get me that great of a return and it's, only down 10% from its all-time highs, maybe I'll look at Netflix because Netflix is beaten down 85%. Or maybe I'll look at Zoom. Maybe I'll look at a Zoom that, is trading well below its, I was going to say pre-COVID levels. Let's double check this. Yeah, I mean, Zoom is trading at its pre-COVID levels. And trust me, I understand, right? 3.5%, 4% interest rates, federal fund rates is not a great environment for growth stocks. But let's break this down real quick. First of all, 3.5% to 4% interest rates historically is still a business-friendly environment. To me, that's not enough that it's going to start crushing companies and people are going to have to lay off half their workforce, right? Because the Fed raised rates to 3.5%. I don't know where we got this notion that 3.5%, 4% is going to be like some sort of Armageddon and all these companies are going to go out of business. The second thing is I think right now, like the current projected Fed dot plot has us pivoting less than a year out, like around Super Bowl. Like we just started the NFL season. By the end of the year, a lot of economists are already saying that, yeah, at some point, kind of Q2 2023, we're going to start to see the Fed pivot. I don't know if that's true or not. I could see a scenario where inflation remains high and the Fed continues to have to keep rates higher. Yeah, of course, that's a possibility. Either way, I just think what we're talking about now was being priced in by the market a while ago, especially in these growth names. Like, there's a reason Zoom is down 86% from its all-time highs. There's a reason Netflix came down 75%. Because the market participants have known that this isn't going to be a great environment for growth. It's not like this is a surprise. I think a lot of people have been hoping and have been optimistic that, you know, inflation would have started to come down already, especially with the Fed, you know, raising rates the past 4 months, and then we're getting ready to start quantitative tightening. And I think that has been disappointing. And I think, you know, I'm okay being honest about that as someone who's been, I think, you know, kind of trying to, I'm not even going against the bear case. Not really. I'm just, I guess, trying to ask questions. And I think when I see a lot of, you know, more in the Michael Burry camp calling for this doom and gloom and, you know, something's going to break in Europe and all this, I just have questions for it because I haven't, I guess, seen things that have absolutely convinced me of that. I've definitely seen like alarming, you know, concerning things. But I can admit, as someone who is more bullish than probably the average investor out there right now, that has been disappointing, the fact that we haven't seen inflation come down as the Fed's increased rates. So you have to keep that into account. And if, again, the Fed announces 75 tomorrow and 2 months we still haven't seen a dip in inflation, then I think we need to have a conversation about the idea, which I presented and a lot of other people were asking this question. What if the inflation we're seeing right now, the raising rates won't do anything about? Right? Where, you know, when we were talking about how used and new cars were some of the biggest drivers, no pun intended, of inflation, right? And let's look at Ford. Let's go back to this. Why is Ford down 10% today? Ford says shares are trading lower after the company said it expects Q3 inflation-related supply costs to be $1 billion above what initially expected. The company expects to have 40 to 45,000 vehicles in inventory, lacking certain parts. So, does raising interest rates, making investments flowing into these companies, slowing those investments down, making it harder, do you think that's going to make it harder or easier for Ford to acquire these missing parts? It's going to make it harder. And that's why a lot of economists were saying, hey, the inflation we're seeing right now is supply driven, right? Limited supply in used and new cars, driving those car prices higher. Limited supply in oil and gas, right? With increasing demand. Limited supply in housing. Why you're seeing rent so high. So I do think a lot of those economists that were saying that and you know, raising that question will be vindicated if we don't see inflation start to come down. And I think the Fed is aware of that a lot of that inflation has been supply driven. But guess what? They can't really do much about that. They can do what they can do. They have one tool, and that's to raise interest rates. So even if that doesn't directly affect all these drivers of inflation, they're going to use their one tool because that's all they can do. They have one tool in the toolbox. It's raising rates to crush demand. So that's what they're going with. Catching up with the chat. Tom Lee. What's Tom Lee been saying? I haven't been following. But yeah, I mean, I think we'll see. I think I want to believe. Hopefully, we can see some sort of inflation start to come down for the sake of my wallet, for the sake of everyone really. But we'll see. Inflation doesn't usually get undone, right? The rate just goes down. Yeah, there are certain places where inflation is stickier than others, right? Like gas is less sticky, right? It's going to fluctuate and come down. Whereas some places or some areas and like travel expenses, right? So flights and hotel fares, like those will fluctuate a lot where they might get really expensive and then kind of normalize out. But other areas, yeah, I mean, like you're probably not going to see a company like Apple bump up their MacBook one year and then go back down the next year. But the inflation rate, what you have to think about is it's measuring the price increase, so that change. So if prices remain just as elevated as they are today, a year from now, the year-over-year inflation would be zero, right? Prices would still be higher than normal, than what we would expect, but because if everything today, on September 20th, 2022, if everything remained the exact same, and then a year from now, we wouldn't be talking. So in that scenario, inflation would be zero, but would inflation have really fallen? Well, the rate of change would have fallen, but prices wouldn't have fallen, if that makes sense. I feel like I'm not doing a good job explaining that, but rent is sticky, yeah. And I think that's what's frustrating right now. Is I think it's a lot of it's like I think that I like the idea that we should be trying to invest more into housing and stuff right now, because we still have a housing shortage. I think anyone in my age cohort that's trying to rent or trying to buy a home knows how hard it is to do so. And by raising interest rates, you're disincentivizing builders to build more housing. But it's what we got to do. I mean, again, the Fed's in a rock and a hard place. So, oh, hell yeah, Money Mitch in the chat. Their inflation in the readings, which are more a measurement of relative. Yeah. Basically, I think so you have to think about prices falling. So essentially, inflation can fall without prices falling, because you just need prices to remain steady. We want prices to fall. I want prices to fall. And then we'll see inflation go, quickly, because you're not going to see it across the board. You'll see it in some areas more so than others. All right, guys, we've got about 35 minutes left of the show. Let me see if I've got... We're supposed to have a second half guest, but haven't heard back from him. All good. In the meantime, if you guys have any chat or any stocks, drop them in the chat. Let's go over here, because I pointed this out yesterday, how yesterday was the first day in a while where gas prices really didn't fall. Okay, so they fell 0.03% overnight. So it looks like gas prices are finding kind of an equilibrium price, stabilizing out here around $3.67 on a national average. Still expensive up here in Michigan. I'm missing the Missouri right now. Let's see back home. Yeah, man, they're paying cheap gas in Missouri. St. Louis County. IEI. I don't know what IEI is. Let's check it out. JRP saying Larry Kudlow states that it is difficult for inflation to come down while the president and Congress keep spending more, and they're fighting the opposite side of them. Yeah. Yeah, we'll see, I guess. I don't know. I mean, prices rise at a specific pace are tolerable. Higher inflation just means price rise at a fast rate. Yeah, a deflationary environment means prices go down. So the Fed doesn't want a deflationary environment. The Fed wants a 2% inflation, I think, year over year. I think that's the target. Fed Reserve inflation target. I think that's like a healthy. Yeah, the goal is 2%. You want the money supply to be steadily growing. So that's why this idea that it's inflation's, trust me, it's bad. The inflation we're seeing is bad, but inflation isn't inherently bad. You actually want some inflation. Deflation can actually have a bad effect on the market, because so deflation works, and we see it in certain areas, right? Deflation works essentially that technological advancements allow certain things to get cheaper over time. To me, the biggest example of this is TVs. If you guys remember back in like 2005, I remember this because I don't know what it was, but my dad was like obsessed with going to Best Buy, and we would just walk around and like Best Buy would just have walls of like flat screens, and like every year they would come out with a new HD 180p TV every single year. What's all created by the media? I have no clue what you're talking about. Fed wants to crush demand by putting into a recession. I mean, and that's why I was talking about earlier. The Fed has one tool in its toolbox. It's to raise interest rates enough to crush demand. Anyway, over time, back then in like the mid 2000s, those TVs were like $5,000. They were so expensive. Not even those like nice flat screens in the mid 2000s. If you go back to the early 2000s, the fat TVs, like the ones that were like 800 pounds, those were even like thousands of dollars. Now you can go to Walmart and get a 55-inch flat screen Vizio with Roku enabled for like $500. Why? Because technological advancements over the past 20 years has made it a lot easier to produce these TVs. They find a better way to produce them. God knows where, God knows who, how much they're paying them to put them together. But now we can go buy one of these cheap flat screens at Walmart for like $300 as opposed to $8,000 in 2002. But deflation can be bad for the stock market, because think about it. If take that same concept to Apple, right? If Apple, which Apple would probably never do this because Apple doesn't have to. It has the brand recognition, can charge whatever it wants. But if Apple's production process got a lot cheaper over its MacBooks, and they were selling them for $2,000 this year, and then $1,500 the next year, 25% cheaper, what's that going to do to its earnings? So you get that earnings. Yeah, I think Moore's law is like specifically to chips, right? Or does it apply to all technology? Just that over time it has kind of like an exponential effect that things get more. I don't know. I'll brush up on Moore's law. I guess we can do it together. TVs do have chips. It's a good point. But is that like the sole thing that has made them cheaper over the years? I have no clue. I'll have to do more research into Moore's law. Yeah, so, and there are people like Kathy Wood is a big person that thinks that we have to worry more about deflation long term than inflation. I think it's getting more and more clear, right? I see this a lot out there that, no reason we have all this inflation. The Fed was at 0% rates for so. I don't necessarily agree with that, because like if we go back, I think all the reasons classic like economic school of thought would tell you would see a lot of inflation, running a deficit, low interest rates. You didn't see inflation. And in a lot of areas, again, like the TVs, you saw deflation. It wasn't until a global pandemic that shocked supply chains, and now interest rates rising across the world, that you've seen inflation really like start to get out of hand. Like, it seems to me like almost like clear, and I guess I could end up being wrong, that a majority of this inflation is supply driven. Whether you're talking about car prices or energy. Like, let's go back to last August's CPI, the one that came in higher than expected. What was it? It was energy prices and rent. I don't know enough about the energy markets, but I guess if we had a more surplus supply of energy available, prices wouldn't have been so high. But the same can go, said true for housing. It's not, I don't think there's been a huge, think about it. Has there been a huge increase in demand for housing? Well, I guess in the sense that there were a lot of institutions and investors like buying up single family homes over COVID. I mean, I have been looking at rents. I think I saw and this coincides with mortgage rates rising. Let me do this. We'll look for rent. We'll look for rents together because I know exactly how much. Filter. All right, let's do this. 2 bedrooms, 2 bath. Yeah, shit is way too expensive. Yeah, 100%. So we're around with syndication. Does it come furnished? It actually wouldn't be a terrible deal, except for the furniture is really ugly. Actually, this has been listed on here. I've seen this apartment on here like a month ago, so they're not getting the $3,000 they're asking for. I've seen a lot of where's this one? This one looks nice. I've seen a lot of prices on here start to drop, actually. But still, again, way too high for comfort. I mean, look at this. Do these people think they're really going to get $4,000 for a month for and see, this has been on here for 56 days. A lot of people I've been talking to have been saying it's been a lot harder to get things filled. Yeah, see, like and Zillow too it's cool because it'll show you the price history on here. Where is it? On my phone it will, at least. Let's see if we can get another one like this one. Price history. See, look. All right, this is perfect. Look, listed for rent, $3,200. 5 days later, $3,000. That was on August 16th. We're more than a month out now. Still haven't gotten any bites. I bet if we check this next week, it'll be at $2,800. So yeah, I think rent's like way too high right now, but I have seen it start to come down. Yeah, I mean, if you want my personal opinion, I don't know you asked for it, and this isn't about politics. I think that should be. I would vote for a bill that would make that illegal. Why should BlackRock be allowed to go buy a single family home? They want to go buy a commercial real estate building, fine. But why do they need to go buy a road on, your grandma, or a house on your grandma's cul-de-sac? Makes no sense. No sense. But that would be, I think a lot of people would get pretty up in arms about that. Oh, the big government regulating business, yada yada. When really, I think we should be trying to protect the everyday American that can't compete with BlackRock on that 2-bedroom home. That's neither here nor there. And that's really the only way that's can happen, if you make it illegal for the company to do so, or you're not, and they're going to do it. It's a free market, baby. Laissez-faire. Capitalism. Ryan Blockchain saying BlackRock needs yield. They couldn't get in bonds, so they bought homes instead. Hey, I'm not the one making the rules. I just I wouldn't mind seeing some I guess more protections for people like you and me just trying to buy a home. I hope I'm able to someday. We shall see. Laissez-faire. I don't even know what that is. Sorry, guys. Just catch up on the chat real quick. I actually saw this the other day. Let me see if I can try to find it. It was prime age labor participation rate by country. And here's what I was really shocked about. All right, so prime labor force participation rate. United States is low as hell on this list. And a lot of the countries that are very high on here, I think the idea, or at least like what I would have assumed, is that countries with stronger like welfare states would have a lower participation rate from, and this is prime age, so I think it's like 20 to 55 or something. Labor force participation rate. Let me see if I can find it on Twitter, because I think that's where I saw it. Labor force. I don't know. Can't find it. Either way, U.S. was lower than some countries that actually have a higher, or like a more robust welfare state, which I thought was very interesting. I heard someone say that when the cap rate on owning property falls below bonds, they will switch their tactics and move away from property. Yeah, but see, like, even that, why I think it should just be illegal for them to do that shit in the first place is because that could have an adverse effect on people too. Think about the people that do own homes if they all go rush out, right? Because the cap rate changes, and now all of a sudden they want to be in bonds and not property, and they put this huge influx of supply on the market, and they all sell at the same time. That could cause some people's homes to crash 10-20% overnight. And a vast majority of U.S. Americans' net worths are built in to the ownership of their homes. So if the housing market crashes 20-30%, it crashes the collective net worth of the everyday American. Because the everyday American doesn't have, 10 mil sitting in an investment account plus a couple homes. They have one home that they might own, 50% equity on, as they still have 15 more years left on their mortgage. And then hopefully some savings on top of that. Yeah, I don't know. Sometimes I don't know how to say words. So if you're trying to make fun of the way I said it, I mispronounce things a lot. I think it's because like a lot of like words that I've learned, I feel like I've learned from like reading instead of like being taught them or like in conversation. So there are a lot of words that I've only ever read. Oh, okay. Cool. All right, guys. About 17 minutes. Let's see. I had written down what else we were supposed to get through today. Oh, I did want to talk about Uber really quick. Just came up earlier. I was talking about, because I was trying to think of companies that because I was reading about different people, how different people that are bearish right now seem to like be really clinging on to this idea that we haven't had like a higher interest rate environment the past like 10 years. How many of these companies will really survive? And that's where I'm saying more like, I don't know if it's really like that, where 3.5% is going to be enough for like some of these companies to go under. I do think, especially, you're seeing a lot of froth being taken out of the market, like in the crypto space and whatnot. But overall, I expect, your Asanas, your Roku, some of these like more high, these growth companies that have already gotten beaten down. I think they can survive 6 months at 3.5%, or 4% before the Fed starts to pivot again. I think so. I could be completely wrong, right? There were a lot of companies that didn't come out of the 2000 crash, but there were some that did, right? Apple, Amazon's, whatever. So I think we should start looking at some of the names. Wow, this is actually a really beautiful chart. It's just very symmetrical. Boom, 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 boom. Cool. Roku. Nice chart. What comes up must come down. No, what I was going to say is Uber to me is a good example of a company that in 08, 09, or whenever it was founded probably would not have been able to grow at all without the very low interest rate environment we were in. What do I mean by that? Well, Uber has been backed by VCs for a very long time. What a lot of people don't realize is that, especially in its early days, basically all Uber's operations were being subsidized by these investors. So it wasn't like, okay, we built this great app. I'm going to connect, Aaron. I'm going to connect Aaron here, who's going to go pick up Joe from the airport. Joe's willing to pay $25. Aaron's willing to do it for 12. We'll take 13. Everyone's happy. No, that's not what was going on. What was going on was the VCs, the venture capitalists that were putting money into Uber were paid Uber, helping to put money in Uber's bank to pay the driver. So the customer, Joe, trying to get picked up from the airport, didn't have to pay $25, had to pay $12. He was like, oh my God, this is an amazing service. This is amazing. It's so much cheaper than a taxi. Why? Because the VCs were paying for it. That only happens in a zero interest rate environment. That doesn't happen, in the environment we're in right now, where the Fed's raising, money's harder to borrow, and people are kind of clinching their pockets. So Uber to me is one that, I don't know long term. I think the app will be around. I think the, company will be fine. I'm sure there are people out there that drive Uber that love it. For the most part, from what I've heard, from what I know, that's not the experience that people have working for Uber or similar companies, whether you're talking, any gig economy, like Bitch is saying in the chat, whether you're talking DoorDash, Lyft, Instacart. I'm not really a fan of any of them. And I think Uber struggles in a high interest rate environment. Again, I don't think Uber is going to go under because 3.5%. No, that's not what I'm saying. And what I will say too is I think a lot of Uber's drawdown in stock price has been a baked-in fear that we're also going to get this big global recession, and I don't really think we're heading there. So that might be a little bit of a bullish case on Uber, but again, less about less about what I really think of Uber stock or company today. More about I was trying to think of what does this environment mean for companies, and I think for companies like Uber, like if there are any companies that are newer, maybe they're not even public yet, but that are in Uber's shoes that Uber was in like 2008 right now, maybe they're gonna have a harder time, getting this VC funding, getting the subsidies, getting its feet off the ground, what's often needed to start growing. So Uber to me right now, I'm not interested in. I could be interested in it eventually if it gets a lot cheaper, the stock, but I don't think it's good for its employees. I don't think it's good for its investors. It hasn't been. Look at the stock. I mean, even here, June 19, like we were making new all-time highs like before COVID here, and Uber had gone down for 6 straight months. So I've never really been a fan of this. Lyft, same thing. Let people set their own rates if truly self-employed. That's a good. I'm not saying Uber does anything wrong. The people that choose to work for Uber, yeah, they have a choice. They choose to do it. I think just over time, I think it's clear. I just don't know if it's as economical as some people, thought or had hoped, that it like makes as much sense. I think a lot of people drive Uber for a couple months and they realize, holy shit, I drove for 8 hours yesterday, I only made $50, whatever, and then they stop doing it. They find other work. Again, a lot of people I'm sure love it. And they love the flexibility of it, being able to drive maybe just a couple hours after your day job. I'm not saying Uber's doing anything wrong. I'm just saying I personally don't like the business model enough to invest in it. But yeah, so think about a company like Uber, who from 2008 or whenever it was founded to now, really benefited from that low interest rate environment. A lot of companies did. But take a company like Apple, for example. like Apple is able, like during and this whole time, we're just on a daily chart here. During this whole time, interest rates are like near zero, right? So Apple's able to grow probably at a way faster rate than it would have been with any meaningful interest rates. But to say like Apple's stock only went up this much in this time frame because of that, I don't know like how true that is. Like how much of it is outside of it is technological advancements or other parts of the country, other parts of the world starting to buy more and more Apple products. Like I honestly don't know. Because I feel like now we're at a point where some people would look at this chart and say, oh yeah, that's because the Fed was at 0%. And it's like, that might be true. And that might be what the S&P 500 looks like too. But I'm sure there are a lot of other charts that in the same time frame from 2004 to 2021 we could look at that don't look like that. Right? And how much of this, going back to the S&P 500 or Apple's chart, how much of this just being in a virtually straight line up from 2014 to 2021, how much of that is like the Fed being at 0% interest rates, or the U.S., or is it the U.S. and global economy, which is very strong over these last 7 years? Or is it because the U.S. and global economy was very strong because interest rates here were low and across the world? I don't know. Yeah, JRP, I'm exactly there with you. Customer of the company, sure. Am I going to use the stock, or am I going to buy the stock? No. And I was just talking about this with Jake Wojcicki yesterday. It's flipped a lot of places, right? Where at the airport the other day, it was cheaper for me to get a taxi than to get an Uber. Not only cheaper, but tremendously, very much so easier, right? The taxi's just sitting in the line, ready for you to go. Whereas you got to call the Uber, go over to this like whole separate part of the airport, find where they pick you up from, and then you got to like battle with 80 other people looking for their Uber. DoorDash, I'm not a big fan of getting my food delivered through these food delivery apps. I mean, trust me, it's there's a time and a place. You know, if it's, from my experience, it's a lot better of a user experience in big cities. So if you're in like a New York City, Chicago, Miami or something, because you have a lot more options and you have like late night options, which I think is like really where it makes sense to get you know, that food delivered through Grubhub, DoorDash, etc. But if you're like just gonna do dinner, it makes like virtually no sense, and I think people are starting to become aware of that. It becomes like almost double the price, right? If I was gonna Uber Eats Chipotle instead of just going to Chipotle, I promise you it'll be like $20 for my burrito to get delivered, versus if I just go pick it up, it'll be $9. The quality won't be as good, and sometimes you're stuck waiting, and half the time, like, they screw up your order, it never comes in the first place. I love that. See, but Baba Zoom, you also probably have to realize too, you're probably in a good, really good position when it comes to Ubers overall, right? You're doing airport rides, which tend to be good. You get a nice little like bonus on those typically. They're typically longer, right? You're probably driving, I don't know from where in LA you are, but to LAX, you're probably getting, you know, $50, $60, $70 plus rides. Whereas a lot of people, you know, and like I'm here in Detroit, Michigan in the Midwest, or when I'm back home in St. Louis, like I'll get an Uber that'll be like a 15-minute thing, and it'll be like $10, and then the Uber driver will get like $6. So yeah, if I were gonna drive Uber, I want to be smart about it, like you do. Like get up early, do the airport rides, make hopefully a couple $100 in a few hours, and then boom, go ahead to the market. Head and shoulder. You're asking about a shoulder on Apple? No. Could be a quadruple top. I mean, if you want to say this is a shoulder, I don't know. This right here, I would say you could argue is a head and shoulders, right? Not even argue. I think it is. Left shoulder, head a little lower. This is a shrug guy. A shrug guy with his shoulders are a little higher than his head. But boom, boom, boom. And this is exactly what I was talking about on the Ford chart. If you get into the trade on a head and shoulders as a short on the right shoulder, boom, and you fell through that support, boom. That's a huge move. If you got into a short here, 180 down to 135. I mean, hindsight's 2020, go figure. But yeah, Inverse head and shoulders here, maybe. Head, shoulder. I don't know, man. I think you can see anything if you look at a chart too long. Oh, you're on the 1 minute. Let's check on the 1 minute. Oh, I see what you're saying. Let's watch. Let's see if you get yeah. I mean, I'd say if you were looking to short this on that head and shoulder pattern, I'd want to wait until let's zoom in a little bit. I mean, you do you, man. You're gonna take a stab at that. Go ahead. I'm kind of worried getting. It does look like on the 1 minute chart here, you do have this nice little uptrend though, so I'd want to see that kind of just like break first. Wow, I'm really bad at drawing trend lines, but you get the point. Kind of this channel line. I'm just kind of scared to go short here in general because I think there's so much short float out there that I think, you know, we could. I think we're gonna see one of these crazy, you know, 3-4% SPY rally days here in the next couple weeks. We talked about that before, just how pretty much every best performing days in bull markets history. Or the best days are in. I don't know. You guys know the chart. I'll find the chart for tomorrow's show. Basically, the 10 best days in S&P 500, like 7 of them have been in bear markets. It's because people get caught short. Plain and simple. All right, guys, that will be a wrap for us today. Please smash the like if you have not already. Subscribe to the channel. We will be back tomorrow for the boot camp and a very special town hall happening tomorrow as well. So make sure to go to our website to sign up for that. You should see some promos for that. But I'll be hanging out here, guys, tomorrow. Excited to be hanging out with y'all. Please tune in if you weren't planning on already. Follow me on Twitter at AaronBree5. Till tomorrow. Love you guys.